Welcome to today's video. We will be looking at the Bay Area real estate market for the first 3 quarters of 2023 and compare it with 2022. At the end of the video, I will give you my thoughts on where we are headed in terms of price, mortgage rates, and transaction volume. Let's start with the number of transactions. Here's what the overall Bay Area number looks like when it comes to listings. In 2023, we had a total of 36,000 listings on the market. In 2022, we had a total of 51,000 listings on the market. That is a 29% decrease from the previous year. And if you look at this graph that I have here, and no, it's not upside down. All the numbers are down across the board. San Francisco had the biggest decline in the number of listings. It's down almost 34%. Solano County had the smallest decline at close to 25%. These are significant numbers, and if you're like me that's out in the market every day, you can definitely tell the slowdown. Let's look at days on the market or how fast properties are going pending. The Bay Area is averaging around 13 days for a listed property to go pending. That's up by 1 day compared to last year. For all intents and purposes, this is unchanged. If we look at the individual counties, every county went up, meaning it took longer to go pending. But if you look closer at the number of days it went up by, it's negligible. The 2 counties with the highest increase in time are San Francisco and Marin, an additional 8 days each. San Francisco from 15 days to 23 days and Marin from 12 to 20. Even with these additional days, it still shows that houses are selling fairly quickly. Let's look at the median list price next. Bay Area median list price for 2023 was under $1 million. It's about the same as last year. When we look at the individual counties, Napa was the biggest decliner, down a little over 5%, and followed by San Francisco, down by almost 4%. These numbers are actually not bad. It means that sellers are basically pricing their property pretty much close to last year's numbers. Now let's look at prices. Bay Area prices went down by over 6.5% when compared to the same time period in 2022. San Francisco was the biggest decliner at almost 10%, followed by Marin and Napa. If you're looking for prices to go down, here they are. They most likely won't be crashing to levels where some people want them to be or hoping to be. Now, I think the more better comparison is the list price to sales price. Let's look at that next. Bay Area average is 7.61%. That means that homes around the Bay Area on average is selling for over 7% the asking price. Alameda leading the way at almost 7%, while Napa is the only one in red, but it's less than 1%. So that's not really even noticeable. So what do these numbers mean for you? Let's start with transaction numbers. It means nothing. Whether you are a seller or a buyer, it's not that important. This number affects us realtors. Less transactions means less business to go around, and that translates to less income as well. Days on the market, it's still showing that properties are still selling at a good pace. Yes, it's not the less than 7 days that we've had during the pandemic-induced market, but this is still a very good pace. In terms of the list price, this tells us that sellers are being cautious about pricing their homes for sale. They're not saying prices were here last year, let's list this year at 5% higher. Sellers are basically pricing it less than last year or at the same level as last year. And this strategy of pricing it lower than last year or about the same is having a pretty good result. When you look at the list to sell price, we can see that at worst, it's selling about the same as list, or in the case of Alameda County, selling close to 7% over asking. So this begs the question of where are we going from here? In terms of number of transactions, if interest rates remain the same levels, we should see the numbers continue to go down in Q4. Now looking at next year's number, again, if mortgage rates remain the same, I think we continue to see it go down when we compare it to this year, next year. Now, if we see mortgage rates starts to go down, things starts to change. I've said it before, the housing market does not have a demand problem. There are a lot of home buyers or wannabe home buyers that are on the sidelines because of affordability. And if you're hoping to buy a home this year or next year, you're probably paying close attention to mortgage rates. It's a good time to look at the big picture of where mortgage rates have been historically compared to where they are now. Beyond that, it's also important to understand their relationship with inflation for insight into where mortgage rates might go in the near future. Freddie Mac has been tracking the 30-year fixed mortgage rate since April 1971. Every week, they release the results of their survey, which averages mortgage application data from lenders across the country. Looking at the right side of the graph, mortgage rates have increased significantly since the start of last year. And just last week, we've actually seen 30-year fixed rates cross the 8% mark. While many buyers have adjusted to the elevated rates over the past year, a slightly lower rate would be a welcome sight. To determine if that's a realistic possibility, let's look at inflation. The Federal Reserve has been working hard to lower inflation since early 2022. That's significant because historically, there's been a connection between inflation and mortgage rates. Check out this graph. This graph shows a pretty reliable relationship between inflation and mortgage rates. Looking at the left side of the graph, each time inflation moves significantly, shown in blue, mortgage rates follow suit shortly after. That's the one in green. The circled portion of the graph points out the most recent spike in inflation, with mortgage rates following closely behind. As inflation has moderated a bit this year, mortgage rates haven't yet made a similar move. That means if history is any guide, the market is waiting for mortgage rates to follow inflation and head back down. It's impossible to accurately predict where mortgage rates will go for sure, but moderating inflation means mortgage rates going down in the near future would fit the pattern. There's a clear connection between inflation and mortgage rates, and if that historical relationship holds true, the recent decline in inflation may mean good news for the future of mortgage rates. Now, what about home prices? Here's what experts are saying. While you may have seen negative news over the past year about home prices, as I have shown here in the Bay Area, they're doing far better than expected and are increasing across the country. And data shows experts forecast home prices will keep appreciating. Here's the latest survey of over 100 economists and other experts and financial analysts. These experts forecast saying home prices will go up every year through 2027. Again, check out this graph that I have here. If you're someone who is worried home prices would fall because of stories you've read online, here's the big takeaway. Even though home prices vary by local markets, experts project prices will continue to rise across the country for years to come. And the Bay Area is no different. In fact, our market, as you know, is more competitive than most, which means more appreciation is on the horizon. The worst case, it could be flat. But also think about this, even though the projected increase in 2024 isn't as large as 2023, it's important to recognize home price appreciation is cumulative. In other words, if these experts are correct, after your home value increases by 3.32% this year, it'll appreciate another 2.17% next year. This is a good example of why owning a home is the right choice in the long run. So this is what we will continue to see next year here in the Bay Area. A market that seems slow and with low activity, but you will be surprised that home prices continue to march upwards. And if you don't act very soon, your dreams of owning a home might start to go up in smoke. You're just gonna continue to get priced out. Hey, thanks for watching. If you have any questions, please let me know, comment below, or simply call, text, or email. Have a good day.